All right, good evening or good morning if that's when you're watching this. We're going to continue with the last installment of our accounting terminology section. And I'm going to pick up right where we left off at the end of last week, which was in regards to the income statement. We basically talked about the difference between the nature of expense method and the cost of sales method, which are two different methods through which we can present the operating section of our income statement. And we said that the main difference is that in the case of the nature of expense method, our expenses are presented based on cost type, which means that the income statement lists positions like material expenses, das sind Materialaufwendungen, or personnel expenses, das sind Personalaufwendungen, or depreciation, das ist die Abschreibung. And in contrast to that, the cost of sales method presents expenses based on cost centers or based on the overall function. So we have production costs, which are most commonly called costs of goods sold. Das sind die Herstellungskosten. And then we have administrative expenses. Das sind die Verwaltungskosten. And then finally we have the selling expenses. Das sind die Vertriebskosten. That's the first major difference between the nature of expense method and the cost of sales method. In Austria, there's another difference, which I'll get to in a second. But before we do that, we can take a look at the overall structure of any income statement. And we see that there are two sections that are commonly referred to as the ordinary section of an income statement, because they show all the income and all the expenses that were generated during normal recurring business activities of the company. Aside from these ordinary income and expense positions, we also have an extraordinary section where we see income and expenses that only occur very irregularly, only because something very unusual has happened. Now, the ordinary section is further subdivided into the operating section, which, as I already said in class, is that section of the income statement which includes all the income and all the expenses that are generated in context of a company's main business activities. And then we also have a finance section, which includes any peripheral income, any extra income that is a result of depositing your money at a bank or taking a loan or investing in securities or something of the sort. Now, obviously, if you're a company like a bank or another financial institution, then your income statement is going to look a little bit different, because your financial section is your operating section. But this structure is always used for your typical manufacturing and service enterprises that are not finance related. So let's get back to the operating section. And I told you that there was a second difference between the nature of expense method and the cost of sales method. This is one that is true in the case of the Austrian income statement and the German income statement. It's not true for all nature of expense and cost of sale based income statements. So this is a little bit more regionally centered. The nature of expense method lists all the operating expenses that were incurred during a business year. It doesn't matter whether the goods or services that we produced through those operating expenses were sold or not. We list all the operating expenses that took place. Let's look at a little example to demonstrate this. We'll consider the case of a company that produces chairs as its main business. And in one business year, it manages to produce 1,000 chairs, but it only sells 800. So there's 200 chairs left over in the company's warehouse. Now, if we take a look at the costs per chair, we'll assume that the material expenses are 20, the personnel expenses are 30, depreciation is 5, and so in total the unit costs of a chair are 55. And now, according to the nature of expense method, we include all the expenses or all the costs that take place in an accounting period. And that means, since we produced 1,000 chairs in a year, we multiply 1,000 times 55 and have total operating expenses of 55,000. The cost of sales method works a little differently in Austria and Germany because it only considers the operating expenses that were incurred for those goods and services that we actually sold during an accounting period. So what that means for a former example is if we only sold 800 shares, then we'll only find the expenses for those 800 shares in the income statement. And if we apply that to our example, we see that the total operating expenses, if we use the cost of sales method, are not 55,000, but rather only 800 times 55, which are 44,000 euro in that case. Now in both cases, the sales price of the chair is 70. So we know since we sold 800 shares in both scenarios, the total revenues that the company generated during that business year were 56,000. So let's have a look. Based on what we know, the operating profit has to end up being the same, regardless of which type of presentation method I use. Let's have a look whether that's actually the case or not. In the case of nature of expense method, we see that our revenues are 56,000. The material expenses, personnel expenses, and depreciation accumulate to 55,000, leaving us with an operating profit of 1. Well, it's a little different from the cost of sales method because here we also have revenues of 56,000, but the cost of goods sold, die Herstellungskosten, they amount to 44,000 as we calculated before, and that leaves us with an operating profit of 12,000. So something is not right. And the reason it's not right is because we haven't considered two income accounts that we use in Austria to compensate for this difference. Since the nature of expense method considers all the expenses, all the operating expenses used to produce a good or service, it also has two extra income accounts that neutralize part of these expenses if the goods weren't sold, if they're still in the warehouse. And the first of these accounts is called change in stock, or if you want to be particularly specific, change in inventory stock. The German translation is Bestandsveränderung, and this income account is used to neutralize the expenses that result from producing an asset but not selling it yet. So in our case, the 200 shares, the expenses for those 200 shares that we have in our warehouse, they will be neutralized in this income account change in stock. By the way, in future years, when we end up selling those 200 shares, we use this account again, but it becomes an expense account, and that's how we compensate for anything that's in our warehouse. The other account that's relevant is called capitalized internal expenses. It's exclusively an income account. In German, it's called aktivierte Eigenleistungen, and it serves a similar function as change in inventory stock. It neutralizes expenses that were incurred because a company produced something for itself. Specifically, it produced a fixed asset for itself, and for example, a machine that the company wants to use in the future. And in this case, these expenses are found in the income statement, but neutralized through the income that's in the position in the account capitalized internal expenses. So if we apply all of this to our example, we see that we credit our change in stock account with the value of those 200 shares that we haven't sold. That's 200 times 55, and that gives us 11,000. And if we add that into the equation, we see all of a sudden that our nature of expense method presentation has one extra position, the change in stock, and with this added income of 11,000, we arrive at exactly the same operating profit that the cost of sales method gave us all along, namely 12,000. So that's the difference.